look at all the three parts in the different videos. The pre-trade checks and balances are very important in an investment bank because it enables the bank to stay in control of its investment portfolio as well as its cash balances. The pre-trade steps and balance, the pre-trade steps include the steps of client onboarding, completion of documentation such as KYC, etc. It's very important to know who's the counterparty that you're entering a trade with. Okay, if you don't know, then please know, or else it will be very given the global rules and regulations on know your KYC as well as AML. It's important to keep a control of understanding who is your counterparty. The pre-trade checks and balances play a very critical role in ensuring that you know what you're dealing with, as well as in complying with global regulations on AML, that is the anti-money laundering principles across the world. The second step is the trade execution. Trade execution is a method of executing a trade. Either the trade is executed on the OTC markets or it's executed on the exchange markets. If it's an OTC market, it becomes even more important to get your pre-trade steps in place because you need to get a documentation with respect to legal documents like credit annex, collateral management, your ISDA agreement if you're entering into an OTC swap or an exotic swap with a counterparty, which could be a very large bank as well, but it still is important that the documentation is in place. Trade execution, I've already uploaded multiple videos on understanding how markets operate on the OTC markets, in a quote market, or whether it's a price order market. Take a look at those videos to understand how trade is executed. You might not necessarily have to deal with it on a processing basis, but it's good to know, okay? The third step finally is the trade, post the trade, what happens. Over here, we're going to break it down into understanding that the bank has to stay in control of its assets, and this step ensures that the bank stays in control. Okay, so the post-trade steps, generally followed by investment banks, hedge funds, commercial banks, etc., is broken down into multiple steps. We're going to discuss 3.1 and 3.2 in this video. We'll be discussing the rest of the steps in another video. Let's start off with the first post-trade step, that is 3.1. This is known as trade matching. So how does a bank ensure that, or get confirmations, like how we get SMS messages from the depositories or from the exchange on which we have done a trade, or as well as from an external agency like a centralized agency? Investment banks which deal with large quantity trades also get this matched. This is known as trade matching. Trade matching ensures that the bank gets complete and total details with respect to the trade as well as a counterparty inputted by a separate agency like TRAX, TRAX, and OMGO in the global markets. Trade matching is thus a confirmation from not the counterparty but from an external agency. Okay, so once the trade details are matched by the external agency or by a matching platform, okay, like TRAX or OMGO, then you are pretty much sure that the trade has been executed, okay? And that is a commitment. It's a generation of an obligation. It's a generation of a commitment on your bank that you have to pay up either the securities or the funds, depending on the trading position that you have taken. The second stage is trade confirmation. Trade confirmation is a confirmation from the counterparty, okay? So the difference between trade matching and trade confirmation is trade matching comes from the external agency, an independent matching platform like TRAX or OMGO, and trade confirmation comes from the counterparty to the trade, okay? So the trade confirmation has to give complete, accurate, and precise information about what is the size of the trade, what is the price at which the trade was executed, and of course, but naturally, what was traded. Okay, so trade confirmation, if it is not come from the counterparty, what happens? You got to wait for the confirmation because confirms have a deadline. If you don't get a confirmation, be sure that your counterparty is facing liquidity problems. Okay, non-receipt of confirms is an indication that the settlement could go into a failure. So the main objective of trade matching and trade confirmation is that the trade details are confirmed and matched. That is, what is bought or what is traded, at what price, and what is the quantity. Once these trade details are matched, the counterparty details are also matched. The counterparty details show that you have put into place the counterparty limits, the counterparty legal documentation, identification, etc. So that once these two are completely captured in the trade life cycle process, we can ensure that the bank has a complete and full control over its investment portfolio as well as its cash and bank balances. This is a very important aspect of preventing settlement failure. Be rest assured, if trade matching is not completed or trade confirmation is not received, it is an indicator that the settlement could go into failure, because every one of these trades, every one of these stages, both these stages have deadlines attached to them. The markets are dealing trillions of dollars worth of assets every day, and there is an important time element attached to it. If the time element is not confirmed, then there could be a settlement failure. A settlement failure could result into hefty penalties on the defaulting party. It could result into liquidity problems for the party that has actually done the commitment of the obligations and so on and so forth. So this is a critical aspect of ensuring that the bank, which has traded and which has played its role in the trade life cycle, it has completed its pay-ins, it's completed its pay-in of securities or pay-in of funds depending on the trading position, is in full control of its assets and cash and bank balances. Thank you so much for watching this video. If you like the content, do comment, like and share with your friends. Keep watching and keep learning.